What's up guys, it's Darren Jackson. Welcome back to the channel, or welcome if you're new. And last week I made a video talking about my personal opinions on how you as a new investor can avoid risk while investing in the stock market. And that was a very important video for me, especially because I feel like, especially personally, avoiding risk was one of the things that I wanted to know before I got to investing. Risk was something that kept me from investing sooner than I did. And this video, I want to talk about another reason that kept me personally from investing sooner than I should have, and that was the belief that I didn't have enough money to invest. And at this day and age, unless you're taking all the money that you make and spending it all on bills to where you're left over with absolutely nothing, even after spending money on essentials, it's pretty hard to not have enough money to invest. Even if you're investing a small amount like $20, $30, or $40 a month or a week, you can still make that grow a lot more than if you didn't. And that's something I would know because I invest $50 a week. And I personally think that even investing a small amount like $50 or even lower than that is super beneficial, especially if you're a new investor. So let's talk about it. Before we get started, I'm gonna give 3 opinions of my personal reasons why I feel like investing on a $50 a week budget as a beginner is super beneficial. And please make sure you watch the entire video because the 3rd reason is probably the most significant in my opinion, and it's my personal favorite, and it's the reason why I continue to invest with an amount like this. So the first reason is something that I mentioned in the previous video and that I mentioned in a lot of my videos, especially when I talk about investing for beginners, and that's the fact that it teaches you about the value of money. So I invest $50 a week, and that's not a number I just came up with out of thin air. I had to budget it out. I had to write down everything that I make every single month and everything that I have to spend on every single month and figure out what was left, and then from that decide what I was capable of taking out while still being able to live the lifestyle that I had. And that ended up, for me, being $50. So I feel like just budgeting it out is super beneficial in this situation, especially because it also gives you an opportunity to figure out where your money is going, and it gives you an opportunity to look at what you're spending on and if you really need to be spending on specific items so you can save more money or spend it on other things or invest into it. Now, aside from understanding the significance that budgeting brings, it again also gives you the value of money. Throughout my time investing and making finances more of an importance, I've learned that putting money in certain places can generate me more income than putting it in others. So that's something that you'll learn throughout this journey. The second reason why I feel like investing a small amount like $50 a week is beneficial for small investors is because it keeps you from waiting until you have a certain amount of money to be able to invest to. Now, there is a feature that's probably available on almost every brokerage app called fractional shares, which essentially allows you to invest in any stock on the stock market with as little as $1. So no matter if it's an Apple that's about $120 a share or an Amazon that's probably over $3,000, all you need is $1 to have part ownership of that. So it's beneficial because I always say, and I've learned this from a lot of investors, that the more time you give your money to grow in the stock market, the more time your money has to grow in the stock market. You don't have to wait anymore until you have enough money for either one of these or any other stock. You can just start investing. And you can also take advantage of the capital gains, and if they pay dividends, the same, but keep in mind you're only going to get a fraction of those based off the fraction that you put into the shares in comparison to how much they cost. But speaking of Apple, a quick example of why even investing a fractional amount is super significant. About a year ago, I think it was November 20th, Apple was worth about $65 a share. That's taking into account the 4-to-1 stock split that they had a couple of months ago. A year later, they're worth about $119. That is about an 81% gain. So let's say I invest into Apple with the only money that I can invest with that week being $50. If I kept it in there for that entire duration of time, that 1 year, my $50 would have grown 81% to about $90 a share. If it's 40, almost $80. If it's 30, almost $60. The point is, the growth opportunity is still there no matter if you're investing all of it to get 1 full share or just half a share or a quarter of a share. It's more money than you'll probably make anywhere else, or just letting your money sit there or spending it on something else. So just keep that in mind too. Now, speaking of all of that, that leads to my 3rd and final reason, probably the most important reason why even investing an amount like $50 a week is super beneficial, especially if you're a beginner, and that's the fact that your money will grow over time. And that's important for me because my investing style has kind of changed. I used to be focused hugely on just dividend stocks, which has gotten me in trouble. But right now I focus on stocks that give me capital gains. Like the Apple example, that's a stock that has a great track record for whatever reason, and it gives you more confidence that when you put money into it, at a certain period of time later, a year, 5 years, a decade, you're going to be getting back more money than you did when you put money in. So you have that opportunity with getting capital growth from individual stocks or ETFs, which are exchange traded funds. Think of it as a basket full of stocks. One great example is VTI, which is the Vanguard Total Stock Market Index. It's basically an ETF where its basket is every single stock in the stock market. And that's something you can invest a budget amount like $50 or less into, especially for the capital growth, because it has increased in the past 5 years almost 80%, which is amazing. And on top of that, it pays dividend stocks. And dividend stocks is another reward besides the capital gains that you can achieve from investing even a small amount like this. And here's an example about, even though you're investing a small amount, how far that goes with the combination of capital gains, whether it's a stock or ETF, and the dividends they may pay. So let's say, for example, that you invest into a company, we'll just call it Company X, so that's what I always call it, and I'll cater it for my situation. Let's just say that it literally is worth $50 a share at that point, and that's all I invest every single week. So I invested into it. Now, not only does this company have a great track record, which leads to them having a history of capital growth, but they also pay a dividend. So let's just say their dividend yield right now is 1%. So in this case, for every one share of stock worth $50 that you invest into Company X, you will get 50 cents back every single year. It's not a huge amount, but it's more significant than you think. So you hold on to it for 1 year, and let's say by the next year, it has doubled in stock price, which can potentially happen, and it's now worth $200 a share. And that's beneficial for you because you just pocketed an extra $50 from your $50 investment, which didn't seem like a lot, but it was more than what you thought. And you just got that 1% dividend yield, which will pocket you at least $100.50. I say at least because that's assuming that that company only pays once every single year in dividends. Most companies pay you every quarter, and some companies even pay you monthly. And there's a reason why I'm mentioning that, but we'll get back to that in a second. Now again, this fictional company has a history of capital growth. It grows significantly over time. It grew 100% over this period of time. But now when a company experiences capital gains, they have a couple of options of what they can do with that money, which can also benefit you. The first thing they can do is that they can pocket that money. They can send it back to themselves and use that money to create more products, to pay their employees, to expand their company, anything that should result in a positive outlook. And when it's a positive outlook to investors like you and myself, we buy more of those stocks. And when we buy more of those stocks, the stock price goes up. When it goes up, you make more money. The second thing that they can do is a stock buyback. It's literally the opposite of what Apple did a few months ago with the stock split. It essentially means that they decrease the amount of stocks that they have available to the public in the stock market, but their value doesn't change. So when you increase it and the value stays the same, the stock increases. So if you decrease the amount of stocks by half, the total stock price will double, which can make you more money. The third and my favorite option is the opportunity to put that money back towards the shareholder as an additional reward in the form of dividends. And with this company, it pays 1% every single year. And going back full circle, there's a lot of companies that pay semi-annually, quarterly, and monthly. So that means if they have an experience with capital gains, they may increase their dividends semi-annually, quarterly, or monthly, which is even more money that you're pocketing, which is why I said at minimum, you're returning $100.50 off your $50 investment. So if they did that, they now keep their dividend yield at 1% for every $100 that you purchase of that stock, which is their current share price, which is great for a lot of other people. That just means they have to pay $100 for that stock and they get 1%. But you bought it at $50 a share because you realize that $50 is more significant than you think. You realize that I don't have to wait until I have enough money. Conveniently, this was $50, but I gave my money more time to make more money. And you are now literally making 2%, because last time I checked, a dollar isn't 1% of $50, it's 2%. That's the benefit of what you're getting from putting your money into the stock market. Granted that you're doing your research and you're putting it into a stock with great experiences or whatever you're looking for, and you're giving it time rather than waiting for these other excuses. It's a beautiful thing, and it's something that I do, and it's continuously a reason why I invest and why I wish I should have invested a long time ago, and hopefully it's a reason that you guys start as well. But let me know in the comments below Are you guys budgeting? How much are you investing every week, every day, every month? And how's that been going for you so far? Hopefully it's been going really well. Let me know what you think about my opinions on these 3 reasons. Make sure you watch some of these other videos. I do hope that they help you on your investing journey as they have in mind. I do appreciate you guys watching. Thank you so much. And until next time, take care.